McGee Wolf with the Wolf Group, back again to discuss another topic to help you make really good decisions in your home buying process. Today's subject is gift funds. If you're planning to use gift funds to purchase your home, or you have a client that's going to be using gift funds for their purchase, then this video is definitely for you. Now, to get started, please take a moment and subscribe down below. And when you do that, a little bell will come up. You click on that and you'll be notified of other videos that are going to be coming out from our channel. We'd love it if you would comment down below, ask a question, or if you feel like you need to contact me personally, my contact information is also down below. We have some documents that are there for you to download if you'd like as well, especially one called the mortgage process, which can be very helpful in getting you through the process with the fewest amount of interruptions or hassles. Now, today's topic is a very important one. It's about gift funds. Gift funds are often used in mortgage transactions, and they are a tremendous resource of funds to help people purchase a home, especially first-time home buyers. All right, so the first question is, who can give you a gift? Well, the answers are a blood relative, your employer or a labor union, a person who has a clearly defined interest in you. This is someone like maybe a foster parent or a godparent, governmental entity that is active in providing down payment assistance for home ownership, and also charitable organizations can provide a gift. Now, who can't provide you a gift? Well, that answer is pretty simple. It's anyone that has a financial interest in the transaction. This includes your realtor, your loan officer, the title attorney, the builder, the contractor, anybody who would financially benefit from the closing of this transaction. Those people or entities cannot provide a gift. Now, what can the gift funds be used for? They can be used for the down payment and the closing costs. What they cannot be used for is reserves. Now, what are reserves? Reserves is the money that is left over after the closing of the transaction that oftentimes automated underwriting likes to see that you have money left over to where if you get under a little pressure, that you have money left in order to make the mortgage payment. If you have zero money left in the bank, that elevates the risk on the loan. So your gift funds cannot be used for reserves. So it's very important that you save some of your own money in the bank account that's left over, that the underwriter and automated underwriting can see that it is remaining after you close the transaction. Now, the first document you need to get to start the gift process is called a gift letter. Now, this is a letter that is filled out by the donor and signed by you and the donor that says that the donor agrees to give you X amount of dollars. It's going to show where the money is coming from and that they do not expect to be repaid. It's a very important part of a gift letter. If they expected to be repaid, it would be considered a loan. So you can't get a loan and use that as gift money. Now, all the different loan types require that gift letter, but from there it gets a little bit different. Now, FHA loans and USDA loans are the most stringent type of loans for gift documentation that requires the most documentation from the donor. They require a 30-day bank statement that shows that the donor has the ability to give you the money. That's called donor ability. And if there are large cash deposits that are on that bank statement, well, those cash deposits are going to be backed out and subtracted from the available balance. And so after they subtract cash deposits, if there's $5,000 left in the bank account, then they will be able to give you that remaining $5,000. But remember, as I've said many times before, cash is not your friend in a mortgage transaction. Now, a conventional loan, a VA loan, don't require the 30-day bank statement that shows donor ability. Donor ability with those loans is proven by the delivery of those funds to you. And hands down, the very best way to do that is with a wire transfer to the attorney's account. Now, a big word of caution, never, ever, ever respond to a wire request that you get via email. After you talk to your loan officer, either with the Wolf Group or with any other lender, you definitely want to pick up the phone and have a conversation with the title attorney's office and get their wiring instructions directly from them. And that is your safest way to prevent the interception of your funds via wire. There's wire fraud going on out there. That is the number one way to protect yourself from the interception of those funds. Pick up the phone, call the title attorney's office, and get the wiring instructions verbally from them over the phone. Now, regardless of how you think you should be delivering these funds, it is very important that you have a thorough conversation with your loan officer, that everybody understands how the money is going to move before it moves. Please, at the beginning of the process, do not have a conversation with your parents or anyone else who's providing a gift and have them give you the money before you get all the paperwork evaluated and in place. The last step is the transfer of the money. It would be really frustrating to you if you had the gift transferred without the proper documentation and you have to undo all of that and then redo it again and document it. So please be sure to review all this with your loan officer. Thank you again for watching this video about gift funds. I sure hope it helped you a little bit in getting some clarity on how the gift funds would work. And please subscribe and share this with anybody that you know that may be in the process of purchasing a home. And as I always say, it is not over till they hand you the keys.